People should not worry about AI taking their jobs. AI is not going to take your jobs. But you should worry about other people who are using AI who will take your jobs.
Right. Welcome to Shaping FinGen AI. And of course, returning, we have Bruno Lorenzelli. He is the CEO and founder of Scalata, making sure that AI is turning from buzzword to actual business intelligence and results. Bruno, thanks so much for being here as always.
Thank you, Tracy. You're welcome.
Today we're joined by Kevin Chen, Chief Economist at Horizon Financial, a global markets veteran who spent years decoding how trillion-dollar AI investments are actually turning into growth, or sometimes not turning into growth. Kevin is also an adjunct professor at New York University, frequent guest lecturer at Harvard, Fordham, and IESE, member of Economic Club of New York and Foreign Policy Association Fellow, and you're a published author on fintech, commodities, and global markets, and also working with companies, specifically in IPO.
Yes.
Thanks so much for being here. So today, we really want to take the lens of macro to micro, right? And that's why we have the two of you here. We really connect on the broader global markets perspective of AI implementation, how that's impacting stocks, if that's really creating change. And then Bruno, looking at the day-to-day of companies and how generative AI in particular is really making a shift in companies and what that looks like. So we'll connect those dots between Wall Street's optimism and real-world execution. So Kevin, you've compared this moment in AI to the early industrial revolution. Massive investment, huge promise, but not yet clearly getting those productivity gains. So are we seeing any economic value, or are we still in a speculative stage? And I know, of course, you're going to have a global perspective on potentially different parts of the world. We're seeing different things.
The answer is both. We have invested a tremendous amount of money into AI infrastructure, energy generation, chip making, implementation, etc. But also we have not seen a lot of gains yet. In fact, if you look at some of the leading AI companies, many of them are still cash flow negative. So I think there's a tremendous opportunity, huge amount of money have been invested, a lot more is coming, a lot more innovation needs to be done, and I think the future will be even much bigger in AI space.
And then Bruno, from your vantage point of building AI infrastructure internally, what does that gap look like between hype and actually creating something that's really going to be able to be implemented on a massive scale?
So the majority of the AI projects or machine learning or whatever you call it before really failed. They were too expensive and clearly didn't obviously produce any tangible results because the lack of infrastructure, because of obviously the amount of money and data that you needed. For instance, just to give you an idea, most of the projects and most of the applications are re-engineered from legacy system. So most of the financial institutions are re-engineering this legacy with some sort of AI application. And most of the startups offering this, they've been there for 10 years, 15 years, big data providers. Mm-hmm. They did nothing more than re-engineering their legacy. You haven't seen really the new one. The new one is, I build a new one thinking in a Gen AI way, I build my tables not using SQL, but for instance using optical imaging, reading. Most of the research projects on data lakes and data is photonic. They use laser to read tables. It's faster and cheaper instead of using chips. So it goes basically through copper. They will use laser, the new ones. Why? Because to power this global infrastructure is so expensive to run ChatGPT, to run things. That's why they are negative. That's why all of these startups, to run their service, they're losing money. Why? Because they need data centers, they need storage capacity, they need that. It is so expensive, their business model doesn't work. Mm-hmm. Now they're looking at new things, how to make it cheaper. So that is the future. Have we seen that? No, we haven't. Why? Because they're dealing with the legacy.
Mm. Mm-hmm. So we're in a moment where announcing AI implementation, and starting to work on that is going to really have an impact on the market. But there's going to be this time frame where we're shifting from what you're creating and what's working on a small scale to what is actually going to be successful and going to be net positive at the end of the day. How do you see that impacting our markets?
Yeah, I think clearly market loves AI idea. So you can clearly see that any public traded company, when they announce AI implementation, when they announce AI project, etc., stock price react very strongly, very positively. However, the market is not stupid, so they always try to figure out what's real and what's the hype. And sometimes after a while, when they realize the company announced something, but there was no real follow-up, no substantial projects or benefit to the company, then stock price will drop down again. So I think you need to, of course, deliver a message, but also you need to be able to implement and show it's really been done in AI, not just a name.
Mm-hmm. Yeah. And you're advising companies as they're going through their IPO. What kind of narrative do you provide or overview that really translates into advice when it comes to AI implementation?
Yeah, sure. I'm on many public traded company boards, and many of them, they do use AI. My advice has always been that ultimately it's about fundamentals, whether it's about cars, trucks, or cross-border payment. The implementation, if you can use it and show it in the financials, in your earnings, in your, new contract, new revenue being generated, that's going to be the key for market to recognize and react positively to the stock price.
And Bruno, we got to bring it back to you when it comes to implementation as well as the foundations. I know something that you're passionate about is making sure that the foundations are correct and that they're there.
To transition towards a full Gen AI, economy, let's say to change your workforce, your workflow, your procedures, it takes time. And to measure that impact and to see the financial results of this impact, to measure them, it's not going to come overnight. So it's a long-term view. See, most of the CEOs don't understand AI, and they go to the CTO, and even the CTO doesn't understand it, tells to the CEO whatever he wants, and then you just pay. That's it. That's what is happening, And so you have this strange situation where there is an incredible hype, offering, from all over the world. And clearly some of them, they don't have, for instance, the backhand, to really substantially do something. But at the end of the day, what I suggest people should do, in general, is that keep innovating. Don't stop. Just even if you fail, even if it doesn't work, even if keep looking at the market, keep new things, keep investing, and keep working. Limit, obviously, your waste of money, waste of resources. You need to do the right thing because eventually good will come there, okay? You see, generative AI, it's an incredible different way of looking at IT. It's a real revolution.
And so when we think about the trillions that are going into AI, and as you've said, Kevin, in your Sun Tzu or in Chinese philosophical anecdotes that you've illustrated how markets view speculative momentum, let's even unpack just productivity for a second. We're not talking about company productivity, right? We're not talking about a specific business. We're talking about the productivity of the economy, of the global economy. When has productivity started to actually gain momentum? What does that look like from a global perspective?
Sure, I can give you a lot of examples. And I think, what the founder of NVIDIA, Jensen Huang, right, what he said, something I want to quote. He said, people should not worry about AI taking their jobs. AI is not going to take your jobs. But you should worry about other people who are using AI who will take your jobs.
Right.
So I think that's a very, very clear illustration. And I see a lot of real world cases. Like I know one robotic company, basically instead of, a construction worker building subways, right? They set up a system that basically one worker would do some, let's say, bending of the rubber, and then you got 3 other machines doing exactly the same thing as you implemented. So instead of 1 worker, your productivity goes up 4 times.
Right.
And of course, the company cost would go down 75%. That's a real productivity gain. Of course, this worker might make a bit more money, but for the whole company, the cost would go down. And also, I've seen large trucks on highway. You have more basic, kind of a team of trucks. 1 driver only, many others follow. And all those, I think, I would say, massive increase of productivity. And also like fintech, cross-border payment. A lot of those were in the past manually processed. Now it's going to be mainly driven by AI. AI would identify most of the problems already before human being have the capability to do it. And so, all those AML procedure, identify person's location, put the data together, it's all going to be done AI, much, much faster, much more productivity gain than, the current format.
And generative AI, right? That is going to be the major shift that we're seeing right now to make an impact. How do you see generative AI among, other AI solutions?
When Kevin mentioned before, most of the projects were too expensive, were failing. Why? Because building a model before, training a model with the knowledge, it was very manual. They were doing manually. Today, you can just click on the cloud of Microsoft or Google, and you deploy your model, and you just train on top of what is available, your own model. It takes seconds. It costs like less than $1. Less than $1 it costs. So what I see is that there will be an explosion of models. Like literally everyone will have their own model. Imagine how much knowledge will be available there to be connected and respond to. Imagine, it's incredible.
Yeah. Our AIs will just communicate with each other's AIs.
Oh yeah. With control, with rules. They will put rules.
Then we'll definitely just sleep.
Yeah.
So let's talk about why you two are partnering. Kevin, why were you interested in working with Bruno? And what did you notice about Scalata that really caught your attention?
Sure, yeah. So I've been in the, traditional finance for a while, right? A public market, private market, all kinds of investments. Some are, healthcare, some are very traditional consumer brand and all those. And you want to work on something exciting. You want to work on something that has huge potential. I speak to a lot of companies every day, but Scalata is really one of the companies I like to work with because I think it represents part of the future because it's a major trend. And when the trend is going up, you want to be part of it. And it will be easier to achieve something when the trend is working for you. Instead of if you are working in some market that is shrinking, then your fight against the trend is very difficult to achieve anything. I want to learn more, and also I want to use Scalata in our process. And also I want to mention that right now there's a major transformation in finance, traditional finance, that is actually new money are going into private credit instead of private equity. Private equity is drying out now.
It's huge.
Private credit is going from $1 trillion to $3 trillion. It's going to do $5 trillion. And then in private credit, it's much more complicated than equity because private credit, you got different collaterals, different levels of seniorities and all those. And not like a stock market, it's one stock of a company, that's it, right? In credit, you got a lot of different combinations. It's very complicated. And AI is really good for this. Mm-hmm. So I want to be part of it and see how it can be used. And I think a lot more people, a lot of more private credit companies are going to use it for their process. And I think it will be incredible to be part of it.
Yeah.
Yeah. It's just beginning right now.
So Kevin, having you here is incredible because we can really look inside a global scope, what's happening in different parts of the world. Can you give us an overview? US, Europe, China, Asian markets?
Sure. Yes, I guess I got education in many countries, and I travel a lot to many countries, Europe, Middle East, Asia, of course. I think right now the world is really at a kind of tipping point. You see a lot of data showing that most of the countries are carrying too much debt. The debt burden, debt to GDP for most of countries are out of control. Traditionally, Japan was, I guess, highest debt to GDP, but other countries unfortunately caught up too. U.S., France, Germany, China, and all those. And with such a huge debt burden, there's really, I think, a challenge of how to deal with those. And I think, one way to do it, I guess, to default depreciation, which is very destructive. And the other way to do it is technology innovation. And I think the humanity, the hope is really to do more innovation, use technology to solve the current problem. And there's a problem for every country right now. Yeah.
So let's start with the Asia markets. How is AI starting to evolve into something that is more productive, potentially, than in other parts of the world?
Sure, yeah. The Asia market, there are a couple of peculiar things. I think one is there's a aging population issue. So the labor shortage is really becoming more and more apparent. So how do you solve this problem? I guess part of it is use robotics, use AI to basically increase the productivity and handling less of a labor supply. And you can see it clearly that in China, in Japan, of course in Hong Kong, Singapore, there have been a lot of implementation because of the, the need of, the lack of human capital or the aging population. And another part is, I think it's a little more controversial, it's about data protection.
Right.
Yeah, globally, I think Europe has higher standard for data protection. Even website, even after a couple of years, you have to delete and all those. US is right in the middle. In general, I think Asia, the data privacy is not as strict, which means a lot of companies can collect a lot of data and use those data for their AI model training and for implementation. Of course, there's downside to this too, but the upside is AI implementation. The AI in Asia is much faster because of the huge supply of data.
We're really talking about the speed of which we can innovate and be using AI. Talk a little bit more about Europe, about potentially what you see because of this more bureaucratic system, a lot more controls. What are we seeing there?
Sure. I think there are a lot of really structural problems in Europe. One is about the energy supply, and the other about regulation. Energy supply is, if you talk to, Elon Musk, all those, Silicon Valley, Microsoft, Google people, they all talk about the AI revolution. The most crucial part is energy supply, cheap, reliable energy. That will power all those data centers, power the implementation. And Europe right now, they are not doing enough to generate reliable, cheap power for AI revolution. I think that's a big problem in Europe. In the US, they're trying to address it. In China, they are very aggressively building up energy supply. In the end, it's about energy. And then the other one is about the regulation. The European the data privacy, of course, I think it's very, very important. But on the other hand, I think it's probably a little too overburdening for the companies. And you look at actually, all those EU-wide regulation, even major AI companies, leaders here, they talk about how they are not able to develop AI implementation in Europe because of all those the EU level control, but also national level data control. And on the other hand, essentially, if you are not following the rule, you get a big fine. And so the joke is that European Union is essentially developing AI by levying a lot of fines. But that's not the way to develop a sector. Yeah.
So for Kevin, first of all, thank you for being
Sure.
my advisor, part of the company, which is an honor in general. But
Okay.
I see today we talk about the transformation on the credit industry in general, and which is the very big use case. Yes. I do agree. But in general, I see the entire financial infrastructure to be changed. Okay, in general. So where do you see the very first-hand transformation in a financial institution? Where are the use cases in your view? Your kind of, provided you talk to so many people.
Sure.
What did they tell you?
Sure. Yeah. I talk to a lot of, yes. And also I do go to a lot of conferences, including last week I was in Washington, D.C. for the IMF, International Monetary Fund, and World Bank annual meeting. All the large banks, JP Morgan, Bank of America, and others were there. And of course, IMF itself, right, the host. And one thing clearly you can see is that the larger banks, they are very comfortable currently. The interest rate itself is very high. What they pay out to deposit is very low, right? They barely pay anything out to depositors right now in the U.S. They have a huge margin. They are doing very well. So when those large banks are doing well, you can bet they are not interested in doing a lot of AI innovation. What for, right? Because it will take some risk for them too. So I see the innovation for AI usage for banking sector, for private credit and all those. I think it's going to be small and mid-sized banks. Small and mid-sized banks, they need to innovate, they need to compete with large ones, and they need to either compete with lower cost or more essential productivity. And I think that's going to be the main, growth opportunities for Scalata too. Yeah.
And then the larger institutions are just going to get FOMO once they're being successful in the smaller and mid-size.
Yes, and I think what they're going to do is what they're always going to do. They're going to wait until the innovation smaller ones are very successful. They're going to do acquisition. They're going to buy those companies and to grow. It's very, very hard. I think close to impossible for them to do internal innovation and then to have their own team developer, because it's also about, I think Bruno hinted a little bit about those, I think, bureaucracy or politics in the bank. Mm-hmm. If you have an established system, you're paying huge amount to the system, you're very comfortable using that. Why I want to develop something that's cheaper and also will be laying off people who report to me, right? So I think it's hard for them to do it in-house. And even I think for the should be independent parties develop it and do it very well, and eventually a large bank will come to buy those to be part of it. Yeah.
And then in the U.S. Right now, how are people's expectations being met or not being met?
Yeah, I think if you talk about the regulation, compliance and all those, I think last year and this year it was very different. There have been kind of a massive overhaul of the compliance and regulation in AI itself, but also in general, even about the digital currency, the crypto space, and I would say also about the competition. All those have been really kind of opening up, and the companies are, I guess, right now they're pretty free to do what they want versus last year.
So I see AI as a new industrial revolution, and so there is good in there. Why? Even if there are no productivity gains in general, but what I see is that there will be more employment for people. Like when there was an internet transformation, that you see basically, the economy, starting kind of growing again, through the depression that was during the 70s or stuff like that. So internet actually, increased the global GDP. And AI will do the same. And it's the great thing is that basically, everyone will start spending money. Right. Spending money, okay? And everyone will start investing, spending more, and the banks, central bank will issue more, currency and stuff like that. So the economy will grow.
Right. That's what people love to hear. They want to hear that prediction.
The way then this will be measured, that's a different story, okay? That's a different story. But the fact that the more money, more investment will go into that, that's for sure. I give you an analogy, you know. I remember I was very young. It was my first internship at the European Union in Brussels. And I remember watching a video where there was the president of Siemens. Siemens, you know, the largest Germany, it was all about Germany. And he said, now this internet and transformation will create paperless office.
Right.
And he made an analogy. The paperless office will be as likely as the paperless toilet. In other words. So the analogy is, to me, AI will increase the workforce.
Yeah.
To me, AI will actually have more people working in finance on the investment side, or more people working in financial institutions doing this thing. What AI will do is that they will produce more, they will be more efficient.
Mm-hmm. Yes.
There will be more control, efficiency gains, less losses. So it will increase their budget, their balance sheet, okay? The world will grow through AI more, okay? And we do better the things that we don't do good today, okay? Traffic control, I don't know, developing Africa, something like this. So more employment, more money, more things. This is what internet did.
Right.
Internet didn't reduce the amount of people working, increase the amount of people working. That's the impact I see.
So let's talk about IPOs, and specifically in the Asian market. What are you seeing that's distinguishing companies? How do you contrast what's going to be successful and not?
Sure. So one role I play is to connect US with Asia. And then the IPO market, and also I would say OZ as a, I guess in a broader sense, it's tokenization. I think it's really, really important and it's a huge opportunity because the US is the largest capital market. They've got deep liquidity pool here in New York. And then all the stock exchanges are going to 24/7 going forward. They want to trade 24 hours per day. They want to attract European companies, American companies, Chinese companies, Hong Kong companies, all coming to the US. So the capital pool is big. But then the supply, a lot of them are in Asia. So, and also what we are trying to do is basically connect those two. And also, I would say Asian countries in general, they are savers. They save a lot of money. Their saving needs to be invested. So connect those companies. It's extremely exciting. And then what we are looking for is essentially, I would say the traditional market is, very illiquid. Like you buy a building, it sits there, right? If you buy a factory, it sits there. And then the US market is very, very liquid. People buy and sell all the time, 24/7. So how to connect those two? Partly it's my job. Hopefully I can help the process. Let those founders, if they can list a company, let's say from Singapore, list a company here, get some liquidity, can reinvest, raise money, build more data centers and all those. And I would say also, it's what we have been doing, but also I think the exchanges right now in the US, they are moving very aggressive to this direction too. You saw the NASDAQ announced they are doing tokenization. They want to have their public traded companies to do tokens too. And New York Stock Exchange, they used to be the number one, right, dominant player. But I would say last year they raised less money than NASDAQ because NASDAQ is very tech-driven. They are very innovative, which means New York Stock Exchange needs to catch up too. That's why you see New York Stock Exchange is listing, those closed-end crypto funds, etc. But I think they have to work very hard. But on the other hand, the competition is good because two exchanges are very competitive, means they are willing to innovate instead of they know that I'm the only choice. So that's what we are doing. So more and more those, I would say, companies, founders, I would say, transform their assets, current companies that in private hand to a public trading forum to have the liquidity. And I think I saw some statistics showing that there are roughly 700 companies in the US waiting to go public. I'm pretty sure out of that, at least half are from other countries and a lot of them from Asia. Yeah.
One question, obviously, I have. Obviously, you mentioned a lot of liquidity. That's why companies come to New York. All this globalization is driving Asian market to be listed somewhere else. You know, because I see they come here. You know,
Yes.
and it's an incredible trend. They are very interested. You know, to be here, to be listed here, to operate, to open, obviously, a subsidiary here, and being also new to New York for me was a big surprise. Do you see this trend growing or decentralized?
Yeah, 100%. I think the trend is consolidation. I think in the U.S., they used to have Chicago Exchange, they have Exchange in Pacific, and all those. I think all those are gone pretty much. And even in Canada, they used to have more exchanges. And even now, all the exchanges in Canada consolidated to Toronto. But even the Toronto volume is still not, it's actually not as big. They're saying that when the US holiday, even the trading in Toronto is much less so now. So the consolidation is happening. In Asia too, the exchanges are being consolidated into major ones. And small ones, it's harder and harder for them to attract new listings. And I think also because it's a kind of what's called, it's a positive loop, right? When you have more companies coming, high quality coming, you attract more investors. When more investors come here, then you have higher quality companies coming too. So in New York, I think it's a very, very powerful trend going on. There are companies who delist from Europe, let's say from Norway or from Germany, and then relist here, and then get higher valuation. I saw some statistics showing that two similar pharmaceutical companies, same size, everything, but when one moved from Europe to the US, their valuation went up 40%, just by location difference, 40% more. So of course the founders love it, right? Yeah. The reason is because there are more people buy and sell, more liquidity, and then they're coming here. So Asia, it's a big trend now coming here too. Yes.
I think that we are not in a bubble. We are actually in an industrial revolution.
Yes.
What's your view? Are we in a bubble or are we keep growing to the top?
Yeah, sure. I think in the AI ecosystem, right, the top 4 or 5, those hyperscalers, they're doing very, very well. They're raising a lot of money. They have huge profit, and their valuation is not excessive. I don't think they're in a bubble at all. And I think they're going to do a lot more next year because all those capex investment plan, I saw the data this year is 500 billion, next year 700 billion, and the following year 700 billion. So in total, 3 trillion to be invested. They're going to be benefiting from it. So Google, Microsoft, Amazon, all those. There's no question that they will continue to do very well, and I don't think they are in a bubble. I think the bubble, there are bubble in AI, but the bubble in AI are in a lot of those, I would say, startups with extremely high valuation. Like you saw some startups, they come out with 5-10 billion valuation, suddenly become a unicorn, and people throw money into it, and then a lot of those, they are burning through it. And I don't know how, there are thousands of them, how can all of them survive? I think that's my concern, yeah.
And the adjustment that we're seeing for my purposes, this is that shift, when that shift's going to have to happen to the smaller and mid-sized financial institutions, as well as the startups that are really going to push ahead and are going to succeed.
Yeah.
Yes.
Kevin, thank you. Really,
Sure.
It's been super.
Yeah, thanks for the invitation.
Thank you.